Hi, Adam Collingwood here. What we're going to do today is we're going to have a look at some cryptos, and in particular NEO, and see whether technical analysis really works, entry points, when to buy or perhaps short sell. And what we'll do is we'll look at how to also spread bet. And that means if you're a UK taxpayer, the returns will be tax-free. So we're looking for buy positions and sell positions, and whether, as I said, technical analysis really works. I believe it does. So I'm going to show you some support resistance lines. I'm going to show you some buy and sell areas, and then you can make up your minds yourselves. I've been trading for a very long time now. I use a lot of my analysis in individual stocks that I buy or short sell, and also as a day trader. So I'm particularly known for day trading the German DAX and looking for scalping pips on a regular daily basis. But as said, I also trade individual stocks, American stocks, UK stocks, and using the same philosophy. Use a lot of psychology with trading, market sentiment, but certainly trend analysis as to when we should be in trades, when we shouldn't be, and what actually reinforces when you should be in the market. So let's look at NEO. What I want to do is show you, there's always a lot of hype with cryptos, and there was talk when the price was at $150, $180, that it was going to go up to $1,000, which is complete nonsense, because if you don't actually have enough buyers believing in it, then they'll just dump, unfortunately it would just be people that aren't in the know that are just left holding the baby, so to speak, and ones really that will just see the value of their money drop and drop and drop. So if you were buying NEO, it's even $60, $50, it dropping to $6 is not nice at all. So I'm going to show you where, if you had happened to you, where you should have got out and when you could have got back in again. Because if something drops to, in NEO's case, if it drops to $6, and you can see potentially that it could rise to $13, then you're going to make 100% return on your money, okay? Because you're just literally doubling the share price. So if the price is $6 and it gets to $12 or $13, that's it. You made 100% return. With spread betting, I'm going to show you you can make a bit more than that. Depends on the broker that you use. I use a broker called IG. Some of you may or may not be familiar with them, but they are my preferred broker, who I trade individual stocks, day trade with, and of course cryptos. So let's have a look. This is a chart of NEO. It's a daily chart, and we are going to go back to here, which is this is where the cliff jumper happened. So the price had been dropping, and then we had this big gap. So from $32, the price dropped all the way down to $19, scrambled as much as it could back up here. So this is when the market was really, really racy, very, very volatile. Okay, so you can see with these look at these candles, really, really, really long candle. You can see the open there was at $24, and then the close of the day was $20. So very strong move that day. Now you see this black line, okay? This is key. This is my secret weapon when I trade anything, because it keeps me disciplined. If the price, doesn't matter whether it's an individual stock or whether we're talking cryptos, I do not like buying anything whilst the price is actually below my black line, okay? So if it's below the black line, then I'm not buying. I may look at short selling, okay, depending on what the pattern looks like, what the setup looks like. But I will not be buying until the price crosses back in to above the black line, okay? So that's something that disciplines me with trading, okay? So if you'd stayed, if you did actually sell NEO, okay, if people were saying, do you know what you want to do? You want to be buying NEO, great price. If you looked at this chart, you say, no, I'm not buying. I'm not buying them because it's in a descent, okay? But people say, oh, no, it's $17 now. That's a great time to go in. It was at $30 a few months back. Great time to, no, not a great time to buy. So you can clearly see that it's in descent. The price was continuing to make lower lows. So there's a lower low than that one, a lower low than that one, okay? So it continued to fall and fall and fall and fall. And although people were crying buy, it still wasn't the time to buy because it was still below the black line. It was also below the 20-day exponential moving average, and it pretty much stayed below the 6-day exponential moving average. That's the 50-day, okay? And I also have a 200-day, which is a red line, okay? So I'm looking at moving averages. I'm looking at relative strength index, whether something's been overbought or oversold. In this case, the relative strength index didn't even come into play because it was completely continuously oversold. You'd consider it to be oversold, but the reality was people are continuing to keep dumping. It doesn't really matter what the relative strength index says in that respect. So that actually goes out the window. Although I do look at it, it went out the window in that respect. So let's see now. So that after that huge cliff jumper, the price, if you look to the right here, so this 6.5, so it dropped all the way to $6, and this is a level of support. Okay, so what we want to do is we want to make sure, around this particular area here, okay, where that potential buy is. Okay, now, so the price continued to look like it was dropping then and going even further, okay, and then it started its comeback, okay. So this candle here, you can see this doji here, okay. Then we had this bullish engulfing candle. So this green candle here completely engulfed this one here. So there's a clear buy signal at that point, okay. The price got through $6, and then let's have a look and see what happened next. Well, at this point here, it crossed. So as it went into the buy zone, this to me indicated another potential buy. So if you didn't buy here, okay, you could have bought as it went into the buy zone. So going back to what I was saying, ordinarily I would not be buying unless the price crosses it by black line, okay. The only time that there's an exception to this is if I do see something like this happening, okay. And the reason is that I could have just put a stop just there, okay. So the risk, if I'd entered here above the candle, okay, my risk was the difference between here and here. So a very small amount of risk, okay. So the reason for that is we had the doji, then we had this engulfing bullish candle there, okay, completely engulfing this one after this massive sell-off. So if you entered as the price crossed through, where would you put your stop? Well, what you can do, and this is the method that I use. When the price goes through, I count back 3 candles. So if I entered as it's just crossing through here, okay, or even on this candle, 1, 2, 3, okay. So my stop would be here, okay. So around 6.5. And what we'll do is we'll have a look at what that looks like on the spread bet ticket in a bit. and then where my target would be. Now, because we're going back here to December, we are going back retrospectively, so some of the trend lines which I'd have had drawn on the chart will have disappeared, but the recent ones are still there, so we can look at those with what the NEO is doing at the moment. So let's have a look. The price, as it crossed through, it actually started to drop back, but look at what happened. It just stayed, it nestled on my black line. It didn't cross through at all. It just stayed there. Okay, consolidated for a while. Actually, it's a few weeks. Didn't do anything. And you see this on this candle here. So on the 7th of February, again, that's a real lovely trigger. Okay, so that's a flag as to, not a red flag, but a very good black flag as to this is a great opportunity to buy. Okay, so it had been consolidating for a while here, and then we had this green candle here. So it was in the buy zone at that point, and that gave us our trigger to buy if we hadn't already bought here. Okay, so the price stayed in the buy zone. So if you'd got in here at $6.5, okay, and not actually bought at that one, then you can see the price lifted all the way up in April 19 to $13. Okay, so what you would have done if you'd bought back then is you'd have made over 100% return on your money. Okay, and the price started drifting down again, and then back up here, and then it dropped and continued its rally. So when the price reached that high point, we would have seen some trend lines, okay, because we are looking at this going back to April 19. It's not going to show up on here, but I would have actually had a target point. So I'm going to show you the target points in a bit in current time. So the price then dropped through here, through our black line again. So we don't want to be in the buying phase. Okay, the buying phase is here. We came back again, 1, 2, 3, and the stop would be just there. Okay, so entry and then counting back there. Now, if you wanted to, it's your own discretion. If you wanted to put an even bigger stop in, then of course you can do. Okay, but what you're doing is measuring your reward for the risk that you're taking. So really, you want to have, you know, at least 2 to 1, 3 to 1. I like much higher than that, but that's what you're looking at, always measuring your risk to reward. And I have lots of other training on how to do that. Lots of just videos purely saying how to measure risk reward. So I'm not going to go into that here, but you just really need to make sure you've got a 2 to 1. Otherwise, why bother? Okay, so you can look further ahead, see where potentially the price might go, but you can see it's crossed the black line and it's starting to move upward. So from here, $10, you look to the right there, that would have been your buy, $10, $10.50, and it got as high as $21. Then so you had this high test here before it started to sell off again. Okay, so even if you could have just made a decision that once the price had doubled, that you're going to start to take your profits, but you certainly don't want to be in if the price crosses through this black line again. Okay, so buy zone, sell zone. Now, if you wanted to, you could have looked at this and said, okay, now the price is crossed into the sell phase. So am I going to sell here? Well, you could do if you were trading NEO and decided to just press the sell button instead of the buy button because you wanted to make money if the price continued to fall. And that would be, if we look to the right here, so $14. Let's just have a look and see where it went to. It stayed below the black line. See how it continued. It did have a little bit of a rally there, these two candles. And then you had 3, 4, 5, 6 candles there as the price drifted all the way back to almost that level of support, which was at $6.50. So this major level of support here. Okay. Now, so we're in this current phase since October where the price actually gapped here. So this was on 25th of October, and then on the Saturday the price actually gapped. And you see that candle, so it completely engulfs this small one from the Thursday. Okay, so it's another indication that there's some volume there. Okay, and then you can see as it lifted all the way up. Now you would have loved to have got in as it crossed there. I don't think, unless you actually look at it on a Saturday, you wouldn't have got in until at least here if you were looking at it. And then on the Sunday it had gone all the way as high, on the Monday as high as $13. Okay, so that was a quick leap there. Price hit a level of resistance, which is at $13, 13.3, and that's when it started to sell off again. Price comes into the sell zone just here with the potential. If you wanted to, you could sell as it was going through there. Count back 1, 2, 3. Okay, now that would mean measuring the difference. You could use that candle or even that candle, okay, but I usually would count back 3, depending on how much stop I would need to have in place and what the potential reward was. So we would be measuring from here to whatever the entry point was here, so as it's crossing through. Okay, so that's the risk there between here and here. And then what we ideally would want here is, if you're selling at that point, to look at a reward from here. Okay, so reward at 6.5, which is the previous level of support for NEO. So I'm hoping this makes sense. Okay, we are looking at trends all the time, but I just wanted to focus here on what happens when a price goes above or below my magic black line here. Okay. There are other entry points I'm not going to go into here because I want to keep this as straightforward as possible, but I wanted to emphasize the importance of knowing when you're going to be buying or selling NEO. And here, as the price dropped, you can see where it went to. It only dropped to 8, as then it started to come back up again. So had you decided to sell and held on and the black line wasn't there, then you would have felt pretty miserable because the price had suddenly started to accelerate. So if you wanted to buy NEO, again, entry here, count back 1, 2, 3 candles. Price never got that low. Okay, so from here to here, there's your risk. Okay, you don't want to risk any more than that. And then an entry at that point. You can see there some of these nice candles as well. That was a lovely one there, which is a doji. And then the next day you suddenly had this green candle, which indicated that we were starting this buy phase. Okay, in fact this one did anyway, because it crossed the black line and also engulfed this candle here. So let's see that small candle. Okay, this one, and then we had this green one, so the price crossing through there. And the other important thing to say here is the moving averages. They start to fan out nicely. So this is the 6-day, the green is the 200-day, this is the 50-day, and this is the 200-day. These are all exponential moving averages. So we've got resistance lines on here, support lines. I'm looking at all sorts of things. I'm also looking at patterns to see whether there's any patterns. So sometimes, if I see a head and shoulders pattern, that may give it a good signal, and that may actually happen when the price is above the black line or below. So near at the moment, you can see after, so this is up to date now, so this is Sunday, so yesterday, 9th of February, NEO had a lovely move from $12.07 up to $14.2, and today it has it's pulled back quite considerably, not all the way, but it's come back, and guess where it's pulling back to? This major level of resistance. So the red line here, we are still having resistance on NEO. Once this turns green, then we know once it's broken through here that is a clear level of support, and potentially we can have the next phase up. But the entry, if you wanted to have bought NEO, would have been here, so 9.7. Okay, so what I'm going to do is now look at the spread bet ticket if you wanted to buy NEO, and what you would need to have on account with your broker. In this case, this is IG. If you don't have an account with IG and you need any help with that, then just let me know. I get free training how to use that, how to buy, short sell, how to set everything up on that platform. So let me know if you need any help there. I personally like trading, spread betting, then will buy individual shares, etc. But when it comes to cryptos, I prefer to spread bet them, and then I'll just use a small amount of leverage, which at the moment with NEO, you have to put 50% margin on account. So you only get 2 times leverage. But if you think about it, if a price rises from $6 to $20, you're still getting a very, very nice return on your money, and you're getting double if you're using the leverage. But you do need to put 50% down. Very different to say if you're trading German DAX when you get 20 times leverage in the UK. Obviously, very different if you're trading in Australia or Switzerland or somewhere else where the ESMA rules don't apply. So let's have a look at, okay, so we're now looking at the IG trading platform, and on the left hand side here we have my watch list, so cryptocurrencies. So we're going to have a look at NEO, and what the spread bet ticket tells us is that you can trade a minimum of 30 per point. Okay, so if you think about it here, this is a very small number, so it's only $13, so it's only 0.13. So if I was to put in here 30, trading at 30 per point, you know, the price would have to go up. Say if it went up by $17, then at 30 per point, if it moved by 17 points, then I'm £510 to the good. Okay, so if I'm buying 13.41, it moves from that price to $30, then 510 to the good. And then conversely, if I put a stop in of $5, so if the sale price was $8.01, then the cost really to me on this would be £150. That's how much I would lose if I was just trading at 30 per point. I decided that I wanted to trade at 100 per point. Of course, the numbers change. So if this were the case, if the price dropped by $13 to $8, so a $5 stop, then I'd lose £500. But if I was right and the price of NEO went up to $30.40, then I'm in for a win of £1,700 there, and that's completely tax-free. So if we go into the particulars of NEO, going to info, and this way it tells me that the margin factor required is 50%. So my leverage is only 2 to 1. So as I said before, if I was trading German DAX, margin factor would only be 5%. So my leverage would be 20 to 1. Most individual stocks now, you're looking at a margin factor of 20%. So you'd be able to get 5 to 1 leverage. Okay, and I do training on how to look at those and what individual stocks you can get for the best margin requirements to get the maximum leverage. That's if you are trading in the UK rather than in any other countries such as Australia, where the rules are completely different. So see Bitcoin's come down today. I've done some analysis on Bitcoin also because that's at a level of resistance. That's why this price has actually dropped by 280 points. So let's have a look at NEO again. Now, if I decided, say I decided that I wanted to buy NEO at this current level, so let's just say at 13.5, and I wanted to trade at 100 per point. Okay, so I've already calculated that now's a great time to buy, and I just worked out my stop needs to only be 2 points away. So it's going to cost me £200. And my limit in this respect, I'm thinking, okay, well, I can put in the a limit order when the price hits a certain point, or I can leave that blank. But just for this training, what I'm going to do is I'm going to show you if I wanted to take it when the price hit 20. So that would be a move of 6.5. So the price getting to $20, then that would mean I would bank £650 tax-free in my spread betting account. Cost again, 200. Now, my margin requirement, okay, so even though I only want to risk £200 by having a stop $2 below my buy of 13.5, so 11.5, I would still need a much higher amount in my trading account. Okay, now normally what happens is they would calculate the margin required, and I can show you how to calculate that anyway. So if we look at a calculator, what we'd be doing is saying 13.5 is the buy price, times that by 100, okay, which is the trade size. Divide that by 2, so or times 50%, because that's the margin requirement. So I'm just going to divide that by 2. So we would need £675 to make this particular trade at 100 per point. So that's covering the downside. Now, bizarrely, you know, if you think about it, that's the equivalent of having nearly 7-point stop. So 7 points below 13.5. Okay, because it's just how the margin requirements work. They're concerned that if the market was extremely volatile, they always want to make sure that you have enough money to pay them back should that ever happen. So they want to make sure that you're covering this bet with at least £675, even though you only really are going to risk £200 of your pot. So the market gapped down when you're buying, you would need to have enough money to cover that, okay, which could be more than the 200. Of course, you could have a guaranteed stop in place, but they still require the same margin requirement. Now, let's say you traded at 30 per point. Okay, so still not calculated the margin, but I'll do that. So that would only cost you £60 if you were stopped out. And the target, say if you wanted to take the money when it increased by $6.50, so 6.5 points or pips. Go to calendar, 13.5, multiply that by 30, so 405, divide that by 2, or you could do times 50%, which is the margin requirement, and there you go, £202.50 is what you would require to have in your trading account if you just wanted to trade at 30 per point. The return would only be £195, I say only. You know, if you're trading in and out of NEO, doing this on a regular basis, then you can accumulate some nice profits, providing you, of course, are right on those trades. So let's have a quick look. If we go back to October, now you could have just stayed in this particular trade from October. So let's just say you bought, go back to this one. So if you bought at 10.5, and then you actually, or even higher, could have potentially, it could have been 10.9, depending on how quickly you were able to get in. Then we are counting back, stop down here, or on this candle here, 9. So we're looking at roughly about, I would say, 2 pips stop there. If you enter in at 11, and the price got as high as 20.9. Okay, so if you were buying there at 11, so go back to ticket, so 11, price to get to 20, and a 2 pip stop. Okay, so 11, so I put 9 pips there. So the price got to 20, you'd have put 2 pip stop there, so you go back to trade. So if you put a stop in there at 9, okay, and then measure your risk. So, you know, you got a 4 times reward there for the risk that you were taking, okay, by taking it at 20. Now, you could have, you know, you could have held on to the trade and it may have dropped back to 18, 17, depending on, you know, what your target point was. But it would have cost you £60 to get 270, but your margin required here is £165, okay? So if we looked at that on the calculator, just to show you, again, if it doesn't show up automatically, how to calculate this. So an order level of 11, you multiply that, because that's the price you're buying, by 30, that gives you 330 there, times 50%, and let's do that again. So 11 times 30, and then divide that by 2, is 165. That's just the margin required. So you need £165 in your trading account to make that particular trade at 30 per point. You wanted to do this at 100 per point, and we're looking at profit 900, but then the margin required would be £550. Okay, so of course the higher the price is, the more the margin that you're going to require, because it's a bigger number. So if you had been buying at, say, $6.50, that point, 6.50 times 100, divide that by 2, 325. Okay, because it's a lower number there. So your leverage is always 2 to 1. All right, so that's the end of this training. I do think that Neo is going to find some, certainly find some resistance here. So it tried to break through, so we're looking for a breakout above 13.2. It's still in the buy zone, so above black line. You still have all the moving averages all fanning out nicely. So you've got this pullback today to 13.2, and I'm going to be keeping an eye on this Bitcoin. Have a look at Bitcoin now, just very quickly. I did some training on that as well. So Bitcoin had rallied to 10.070, and it's now finding resistance. And just to show you how this works also, so in the buy phase, so Bitcoin had dropped all the way down to 6.545 at Christmas. And what do we have next? We had, and there's an engulfing green candle here. See this one? So it's bigger than the body of this candle from the open to the close. Okay, open there to close, open to close. And these candles here, 1, 2, and then that's when we had this push through. So that was on 6th of January. And since then, what we've seen is a nice move up. Okay, so had you actually bought Bitcoin and got in here at 7615 and then counting back, stop, 1, 2, 3, you could have had a stop down here and then a buy somewhere around here as it's crossing through. You want to get it as it's crossing, and the price there, it would have been about 7,700. 6,870 would have been the stop. So you're talking there difference between what you're buying at and where the stop is, 6,870. Yeah, so about 900 pip stop. But look at where the price went to. So it's Bitcoin. So Bitcoin, you can only trade, well, you can trade as much as you want, but the minimum size here is 0.2 because it's such a big number. But you can see the margin requirements on Bitcoin is still 50% because it's such a bigger number. You still need to have a lot of money to be able to trade with, because what we're doing, if I was going to be buying them now, but at that point when the number was lower, let's just go back to it. Yeah, but about 7.7 as the price is crossing through, about 7,700. .20. You see the margin requirement on that lower number was 770 compared to 900 odd now. So even if we were going to be putting in just 900 pip stop, okay, so it's 6,800 being a stop there, that would only be £180 that we'd be risking here, but we'd still need £770 in our trading account at least just to cover that trade. So, you know, you're controlling the price, but it's costing you that much to get in on the action. What I mean by controlling the price is you're betting on the price going up from there. You're not physically owning the owning Bitcoin. You just literally are betting on the price going up and these price movements. So the stop there, 900 points away, would only cost you £180. For the potential here, what the price has gone up by. So if you buy and so at the moment 2,000, so you'd be up £400 at the moment. Okay. So I hope that all makes sense and this training's been useful. If you do have any questions, then you just need to let me know. You can email me, adam@learnhowtotradeshares.com. That's adam@learnhowtotradeshares.com. I do regular training videos all the time. If you want to have a consultation, then by all means you can do so by booking the link somewhere in this video. If you've got any comments to make, then please make comments. I'd welcome comments. And if you do like this video, find it useful, then please smash the like button. It does encourage me to make more videos. And all that's left to say is happy trading, make lots of money, and I will speak to you all again soon.